Good morning, family. This is your boy Shocking once again, and I'm back with another video. In this video, we're going to talk about Xauusd. We're going to map it for the week. We'll use moving averages and the stochastic oscillator to decide whether we're going to buy or sell, and look at various factors. So the first thing we obviously have to do is remove any drawings that we have on the chart. Make sure that you're on the daily chart. That's basically why I keep scrolling in the video, because I want to make sure that I'm on the daily chart. Once that is set and done, mark out your important levels of support and resistances. Whether you call them demand and supply, it's basically the same thing if you look at it. Once you have marked out the most important recent support and resistances, which will be the points which are most likely to be hit along the new month and the week, let's say. But our main focus is on this week's trading idea, because last week we had our focus on a sell opportunity. This week it's going to be diverted to a buying opportunity. Reason being, remember we told you that price was going to be testing the 1930 something zone as for the retracement, right? Now it has reached that 50% level of the retracement, and now we have to look for buying opportunities. Price will have to accumulate and then go up. Okay, so basically after marking out the important points, I always keep I always draw my equilateral channel, because I believe that in this way I'm able to identify the angle of inclination of where price might go before it actually rises. So basically, as you can see, the 1889 zone, where the gap was, is the most likely to be tested if we fail to buy this week. Okay, so understand me correctly. If we do not buy, basically if price doesn't go up from where it is to the 1975 and test the 2005 zone again and break it, then we should be looking to continue selling all the way to the 1889 zone. Okay, so understand that. Hence I have actually marked out those zones. Okay, so the gap is at 1847 there, but 1889 will be the first zone to confirm that price will keep going down, and then if it breaks we go to 1847. So keep that in mind and use this to your advantage, and you can use indicators to confirm whether price will be bullish or bearish. Okay, and also look at fundamentals. So basically what I'm doing here is just illustrating how I would maintain my focus on this trading opportunity. So basically price has just hit an order block somewhere around that zone, right? And I don't know how long it's gonna go up for, but from what I can see is the price hit the 50% level of that order block, and it's gonna go up for a while. Well, it will most likely hit the 1960 zone, right, as a retest, and then drop all the way down to 1889. So if you're able to buy to 1960 something, that would be great for you. And then once price is at that, around that zone, if it doesn't break the previously formed structures on its way up, then start looking for selling opportunities, because in this case scenario the selling opportunities will be more prominent than the buys, since price just recently changed to a downtrend on the H4. Okay, keep that in mind. I'm not here to give bias market directions or signals or whatever you call it, but I'm here to help those who have the same idea and the same mindset as I have. Okay, and this is why I keep doing this during the weekend or every week, just so that we are both on the same track. And the reason why I do this once a week is because I figured out that there's a trend. Okay, price will most likely move in the same direction throughout the week, or basically if it presents selling opportunities, the most prominent opportunities for that pair will be selling opportunities throughout the week, unless there's a major reversal, which can be caused due to fundamentals or other technical factors. So basically this was my main focus. And then the next thing I'm going to add to this is my stochastic oscillator, just so that I'm able to determine the buying or selling power. Okay, so by this I just want to look at how overbought or oversold price is. So currently on the daily chart, price is on the 20% level of my stochastic oscillator. So 0 to 20 signifies the price is oversold and should be buying all the way back to 80% or 100% to overbought. Okay, so this doesn't mean that you should already buy, but it tells you that price is saturated on the sell. Okay, so price needs to regain strength in order to continue selling, and this will give you comfort in terms of whether you should buy or sell. Okay, it's just another confirmation that you need. But then as you can see on the smaller time frames like 15 minutes and so on, the 15 minutes is actually oversold, but then 30 minutes, 45 minutes, 1 hour and stuff, you still have to wait a bit. Okay, so depending on what strategy you use, if you combine this with your moving averages, then you'll be more or less able to check whether you should buy or sell. So I bought as a test. Okay, these are small lot sizes, it's not gonna cause me much damage. If it goes up, then I'll wait for a confirmation entry. If it has to retest, then I go big. Okay, so if price decides to drop, where is that gonna happen? Okay, if it's now that it's buying, where will it start selling? So in order to check that, I'm going to use the 200 moving average, and then I'm going to use the 100 moving average and the 50 moving average to determine the selling point. Okay, where I should be careful and not hold my buys for too long. Okay, so this is a combination of the stochastic oscillator and the moving averages, just to determine where to enter, where to exit. Okay, so basically, as you can see, I have three lines on my chart. Those are the moving averages, and what I want to look at, especially on the smaller time frames, we're talking about 15 minutes, 30 minutes. I prefer the 30 minutes for the moving average because it seems to be the most accurate for me. I don't know about you, depending on your settings. But the 1954 zone will be crucial. 54, 56, 57, that will be crucial. And most likely if it extends all the way to 1963, yes. But then once price gets to that level, try to look for sales. If you have buys, close them, unless there's going to be a retest of the broken structure and then price continues to go up. If that's not the case, as you can see here too, the 1975 zone, where the crossings of the moving averages are, is a very crucial zone, and you should maintain your focus when price gets to that level. Thank you very much.